The market is still trading the AI story, but risks are also rising. Today is May 11th.
Good evening, everyone. Welcome back to today's After Hours Market Chat. I'm your stock market buddy. It's Monday, and the market just closed slightly higher, still looking relatively steady. The S&P 500 closed around 7,412, and the Nasdaq also edged up to about 26,274. The VIX was hovering around 18, so the market was not showing much fear. Why did stocks rise? Mainly because AI chips and tech names are still doing the heavy lifting, while most earnings reports have been coming in solid. Investors are basically putting geopolitical worries on the back burner for now. It's a little like a weekend gathering, everyone is chatting, the hot pot is ready, and people keep eating with a smile.
On the Fed side, Powell is approaching the end of his chair term, which is set to expire this Friday. He is expected to remain on the Board of Governors. That is because the Justice Department has ended its investigation into the building renovation project, although a restart has not been ruled out. Powell has said that until the matter is fully settled, he will remain at the Fed. Kevin Warsh is now moving closer to taking over the Fed chair position. On Monday, he cleared a key procedural hurdle in the Senate, the cloture vote. As early as Tuesday, the Senate is expected to hold a confirmation vote on his nomination to a 14-year term on the Federal Reserve Board. After that, senators would begin the confirmation process for his 4-year term as Fed chair, with that vote potentially coming as early as Wednesday.
The next FOMC meeting is still scheduled for mid-June, and the odds of a rate cut are not very high, so rates are likely to stay on hold for now. April unemployment was 4.3%, which suggests the labor market is still holding up reasonably well. March CPI rose 3.3% year-over-year, which is sticky, but not out of control.
Sector-wise, tech is leading, while energy is a bit tired. The Magnificent Seven have been strong, with the big tech names doing most of the work. High-yield credit spreads remain relatively tight, which suggests investors are still comfortable taking risk. But the Shiller PE is now above 40, which puts valuations at historically elevated levels. It's a bit like buying a limited edition pair of sneakers at a premium price, exciting to own, but you still need to watch your step.
Overall, the market is choosing to focus on the good news, and the AI story is still unfolding. But valuations are getting higher, so the next move will depend on whether earnings and policy can keep supporting the market. Just like in a TV drama, when the plot reaches its peak, it's smart to keep your seatbelt on. In the next episode, we'll dig into the earnings of a major hot stock. Thanks for liking and subscribing.